What can we expect from Bitcoin? The markets have been in a state of turmoil for quite a while, and there's been fears about a looming recession, bear market. Let's see what the data supports. This is crypto simulation theory. I'm the Gaussian snake, and this is not financial advice. So, taking a look at the chart for Bitcoin weekly, I want to point out a few things. First of all, I have a stack of moving averages. This is the 20 week in yellow, the 50 week in blue, the 100 week in white, and the 200 week in red. These are whole moving averages, not simple moving averages. They're less lagging. Right now, Bitcoin is in between the 20 week and the 200 week. Now, often the 200 week is the line in the sand between a bull and a bear market, as we could see looking at the past. Anytime Bitcoin got below the 200 week for too long, it did threaten a potential bear market, although it did happen in mid 2021 and we did not get a bear market right away. But the August or the April 2021 top was quite significant. There are some exceptions, right? When Bitcoin had a recession that it went through, it was a very brief recession in March of 2020. This was the COVID drop. Bitcoin did go below the 200 week moving average, actually went below it also in late 2019 and even in September of 2019. That's one of the only exceptions besides what happened in 2021. We also can see in 2018, Bitcoin did briefly go below the 200 week, happened in May of 2018 as well. But during the bull market, it stayed above the 200 week the entire time. If we go back to 2014, again, April 2014, we were already well in a bear market. So as time goes on, I think these moving averages are harder to maintain. And you could argue, well, maybe we need to add another one here. And we can certainly do that. So I added in a 300 week moving average. That is, I believe, in, let's see, which one is 30? Yeah, I forgot already. 300 week is purple, and the green is a 400 week. And so those are in no danger to be taken out at the current moment. We know that the 400 week is currently at 63.4K. The 300 week is at 68.8K. You could argue that over time, some of these moving averages will be a little bit easier to take out because we have just much more data along with diminished returns and diminished volatility. And certainly an argument can be made for that. But nonetheless, getting beneath the 200-week HMA is not a great thing. And we are identifying that as potential resistance. We don't know exactly how this weekly candle is going to close, but I'm just throwing these other moving averages in here as reference points. You may see significance, especially in the value of like 63K. So we'll come back to that later. So I threw on the weekly Gaussian channel, and you can see that Bitcoin for the first time since September of last year, so about a little more than 6 months ago, Bitcoin has been touching the upper boundary of the green Gaussian channel, which has been widening. A widening green channel is not generally a good thing. Also, the Bollinger Band is turning down, and Bitcoin is staying in the lower half of the Bollinger Band and not even making any trips above it. Currently, the median line of that Bollinger Band is looks like around 89K. So that's not a great sign to see it turn down this way. Not sure how well you can see this, but the downtrend SAR is doing something that could potentially precede a bounce. The downtrend SAR is not super steep, right? It is going and inflecting here. So see, it was very strong downward behavior, and now it's up. The invalidation for this SAR is about 104K to create a new uptrend. We've seen these things invalidated, like here, briefly. The 6 to 7 month crab trend from last year saw that happen, and then we had another downtrend SAR followed by an uptrend SAR. And compared to like bear markets or even just past cycles, these SARs are a lot less volatile, which we would expect, right? We would expect that. But certainly something to watch as we are currently in a downtrend SAR. So it's quite a distance up to invalidating that downtrend. Okay, and this is a linear regression channel that extends back 155 weeks. It is a strong trend, meaning that this channel is a pretty good representation to fit this data. We entered into this channel in June of 2022, so almost 3 years ago. And we did nearly reach the top of it. This is a 155-week channel. We almost reached the top of it in March, didn't quite get there, got below the median line of the channel, and then put in a lower um, a macro lower high relative to the channel, right? We didn't go reach the top of the channel at the time. That would have been about 120K. And we went below the median line around 90K. And it looks like we're kind of like going sideways, potentially into the channel. Now, there's no guarantee that this channel holds. What I am concerned about, of course, is a downtrend forming, right? And like, let's just say that in May, we had a big drop to there's that 64K, 63K value. If we get below that value and go down here anywhere, that will actually break this long-term channel to the downside. So that's just something to watch out. Those of you who've been following my channel for a long time know that I really enjoy looking at Bitcoin on a logarithmic trend. This is an 800-week fit of logarithmic trend data. And you can see kind of as the trend goes on, this is in 0.5 increments of standard deviations away from the mean price, which is obviously what Bitcoin tends to oscillate around. We reached the peak of this in May of 2011, and every single cycle thereafter, we've kind of gone lower, right? So like in the last cycle before this one, we went to about 1.5 standard deviations. And in this cycle, we didn't even reach 1 standard deviation. Now, we don't know if this cycle is over or not. Certainly feels like it at times, right? But if we zoom in, let's kind of see what's going on. Now, we have been above the mean price. This is going back 800 weeks. Back in November of 2023, we got above the mean price, which at that time was $37,000. Currently, the mean price for Bitcoin is about $56,000. Okay. If we were to go, let's say, underneath by like, less than a standard deviation, if we did enter into a bear market, and let's say that happened like sometime, I don't know, let's just say August or September of this year. I'm just making this up. I have no clue. Maybe October, November, puts us around $50,000. Okay. So like the last bear market we had, we got down to the -1 standard deviation line. Now in the COVID drop, we got down to that was -0.5, -1, and the COVID drop was about $4,000. If we were to hit, let's say -1 again at some point in a future drop, like out in, let's say we had a really bad recession or something, May of 2026, that'd be like 25K. Okay. I'm not saying that has to happen or that will happen. It's just, these are all possible values. To give you an idea that, Bitcoin is very unlikely to reach this top part of the logarithmic line. That's like almost like 857,000. The 1 standard deviation line, if we were to like draw it out like to the end of, or to 2026, like say the end of 2026, we're talking like, we're getting up probably a little bit higher, like around 200K. Okay. How high can Bitcoin go? We don't really know. What we do know is that every single cycle we've gone lower. Is this the height of this current cycle, or has the cycle we're in not really completed yet? That is something I want to discuss with you, because I have my own thoughts about that. But anyways, just taking a look here, we are currently underneath the plus 0.5 standard deviation line with our price of 83.6K. Again, we're still a ways above the mean, so just keep that in mind. Now, in terms of risk, you can see we've always touched the top of this risk curve. That did not happen yet. So either that means something is different this time, or we're more likely in a period that resembles 2019 to 2020, which I think is highly likely. I'm going to talk about reasons why in a little bit. Okay, but even in 2019 to 2020, we still came all the way back down to the blue line, right? That was hit. In fact, that wasn't even hit in the bear market of 2018. It only got hit once we got to the recession in 2020. It was hit quite a few times in 2016. It's only been hit in December 2022, hasn't come down since. So let's just suppose we were to hit the bottom of this line sometime, let's say it was like May of 2026, that would put us about 52K. Let's say it happened sooner, like around now, around May, let's say, that would put us at around 39, maybe 40K. Currently, we're at a risk value of 46.81. 46.81 risk is, around 40 risk is about 75K. Zero risk right now is 40K. So I mean, if we saw something like a COVID drop, or like, it could take longer to get down there, but let's say Bitcoin kind of like tumbled down, 40K could be a pretty significant level where you might expect a pretty nice bounce. 10 risk is at 46K, 20 is at 54K, 30 is at 64K, 40, like I said, is at 75K, 50 is at 88K. 100 risk, which is where you would consider kind of the end of the bull market for Bitcoin if it were just talking about ROI extensions, that's at about 197K, getting closer and closer to 200K. Now, if we shift our focus to a higher time frame, namely the 2 week, I want to come back to this. I've talked about this before, but Bitcoin did something with its Gaussian channel on the 2 week that's only happened once before, where it went from green to red back to green. And right now the Gaussian channel is quite tight, and this is bullish. This is a bullish formation. We do have price action falling out underneath the median line of the Bollinger Band, but still well above the Gaussian channel, which hasn't been revisited once in this bull market. The top of this Gaussian channel, if it were to get revisited, let's say out in May, it's at 58K. The bottom of the channel would be like around 38K, like around zero risk. That's just something to kind of keep in mind as we navigate the rest of this year. Those are some price targets. The bottom of the Bollinger Band right now is about 64K. Again, there's that 63, 64K, right around the 3 to 400 week whole moving average. I can't remember which. But yeah, if we go back in time, you can see we had a very similar formation from 2016 into 2017. However, the price action was quite different at this point. Diminishing returns volatility, you can see that this inflection is not as dramatic as it was back during that time period. It's taking a longer time to play out. I'd like to take a look at some indicators on the 2 week, because I feel like with Bitcoin, you really have to zoom out. It's like anything can happen like on a day-to-day basis, but when you kind of start to increase your time horizon, then it can kind of help you identify potential likely trends and outcomes. We know that we have the high federal funds rate. I mean, the Fed has just been holding rates steady for way too long, and that has been damaging the economy. We have tariffs kind of out of control right now, so that could bring about some, inflation and really complicate the Fed's plan, right, to try to control inflation. So keep all those narratives in mind. I normally don't care about narratives, but I do care about them when they impact inflation, or you know um, liquidity, right? Those are important narratives to track, because they can affect how risk on or risk off markets are, because market participants do not like uncertainty. Looking at the 2 week ADX and DI, can currently see that the green and red directional index are almost intersecting. The bears are definitely in control right now as we have this convergence. The trend strength is about 33.47, notably less than the 58.54 trend strength during the last crab trend. So as we see trend strength starting to crest at around 33, it would be reasonable to anticipate that we could see some crabbing return. In the price zones that we're currently in, maybe a little bit lower, especially if we get the red getting above the green, indicating, we haven't really seen that happen since 2022. We saw it briefly happen in 2023, right? And then briefly again in 2024. The really big bear market is usually where you see these big divergences. So if we see just a little divergence, that's not nothing to really worry about, but we want to watch out for divergences kind of like this, which happen during bear markets. So yeah. The average sentiment oscillator is printing a really interesting looking pattern. You can see the green converging towards the red. That's bearish. And the length of this is representing pretty much a bull market, right? So started in February of 2023, where we had this, what I call bull bubble. Now, granted, you really start turning bullish as you exit a bear bubble where the red's above the green. But I kind of look at the core activity in a bull market as existing when green is above red. So green got above red in February of 2023, about 2 years and 2 months ago. You can see in the past, the 2020-2021 bull market, bull bubble was kind of split in two. It's you had your first part, which went from April of 2019 to November 2019, and you had a bear market that ended in April, and then you had your bull bubble, which went from April 2020 to August of 2021, and it was just not very clean. You could see it was split up into 1, 2, 3 phases. 2016, 2017 was very one of the cleanest bubbles you could get, in terms of a bull bubble. This one started bullish cross in August of 2015 and ended in May of 20, or we'll say about April of 2018 is where the bubble officially closed, and that's where the bear market really started to get more aggressive, right? And with a time-based capitulation. And here's your bear bubble. These don't, like I said, the bubbles don't exactly align with bull and bear markets, but because when you're in decline, then that's like a bear market coming in. When you're in the incline, that's a bull market coming in. This looks a little similar to what we're experiencing right now. This was March of 2012 or 2012, and that's closed out in May of 2014. So pretty similar length to the bubble that we have now, and then it was followed by a bear market. So if we compare to that time, and there are a lot of similarities to 2013, we could be closing out, and we could potentially be starting, you know, a year-long bear market, and that bear market, may have already begun. Like it could have started here. I mean, it's hard to say exactly, right? But we could be heading into one, right? This Gaussian channel could widen. We could come back down. It is something to consider. This is the oscillator wave trend. Comparing it to past cycles, we can see that with each passing cycle, we have gotten lower and lower in terms of getting above the red zone. This red zone representing sort of like a oversold zone. And on the 2-week, we've never actually reached overbought, right? This zone's never been reached, but we have definitely found pretty substantial bottoms occurring near this green zone, right? So if you look at the first area, that's like, the 2015 bottoming process, you've got 2019, January, February, right after that 2018 drop. Here you've got all of like late 2022. This is a pretty bearish formation that we have right now, to be honest with you. We got our red dot, which is slightly below this red dot, and then another red dot. This red dot occurred in April, and had a red dot occur in roughly December, January timeframe, and now we have a red signal line. And we haven't gone below zero. Okay, last time we went below zero was in early 2022. It took us a really long time to get back up. So this is something to consider. Like, where do we go from here? Do we come back up one more time, put in like a lower red dot? I mean, that is possible. Or do we just head down again and start a new bull market maybe sometime later this year or in 2026? So it's a big question. Something else to note is the Gunnar EMA, which is sort of like a bull market support band. The price action right now is between the red and the green. If we drop, there is a danger of these crossing. And when these cross, you get a bearish cross. Last time we had a bearish cross was in April of 2022. And by that point, the bear market had already been going on for a few months, right? What about before then? Well, interestingly enough, we did get a bearish cross during the COVID recession. Take note of that. For bearish cross before that, August of 2018, honestly, the bear market had been going on for quite a while at that point. What about before that? Well, October 2014, again, the bear market had been going on for quite a while. So when you get these bearish crosses on the 2-week time frame, November 2011, your bear market is underway. Can't really say it's almost over, but it's underway. So let's just suppose that we got underneath the red moving average. I'm not saying we're going to, but let's just say that we did, and that took us into the summer like that. It's possible that our bear market that we've potentially been in since January could be, quite a ways underway, and maybe we don't have that much longer to go. And it's for reasons like that I'm definitely open-minded to more bullish price action, taking us to potentially new all-time highs. At the earliest, I'd say half two of this year. So like from like July onwards. And potentially into 2026. We'll give some more reasons about that in a minute. Those of you who've been following my channel for any length of time have heard me talk about this indicator. It's my favorite indicator. It's called the Reverse Chandan Momentum Oscillator, or RCMO. Works a little bit like RSI, but the formula is a little bit different. We did something very significant back in Q1 of 2024. This is sort of like a measurement of like ROI momentum. It's kind of how I think of it. Bitcoin's top at 73.5K was quite significant. It took the RCMO on the 2-week time frame to almost 100. The last time the RCMO got that high before that was around March of 2013. Okay. It had been like 11 years since we had an event this significant. We know in March of 2013, after that, the market went into a bear market, like after achieving it didn't right away, right? It cooled off for a while and had a brief higher high on price, certainly not in ROI, but in price in November of 2013. Okay. If we were to go back to that time frame, you can see I think this top probably had less of a percentage gain than this original top from the market cycle bottom, right? Yeah, and so anytime we've gotten above like the 85 level on the RCMO, prices dropped into a bear market. One of the exceptions is this 2019 echo bubble, which I really want to emphasize and focus on a little bit. But in the 2019 echo bubble, we came down, but ultimately the trend was reversing, right? Like we were putting in higher lows on the RCMO until we crested in January of 2021, and that sort of began this really long downtrend in RCMO. And then the RCMO hit its bottom in September of 2022. Yes, price fell a little more than that, but that was a significant moment at a level of like around negative 64.43. And then from September of 2022 to February of 2024, we went almost all the way to 100. And then you can see that clearly the trend is turning bearish again. It's putting in a head and shoulders pattern though, which has never been seen before on the RCMO with on the 2 week. So that just indicates to me this is a very like slow movement, right? Like on a longer, like moves are just taking a long time. And in fact, this downtrend here, the 6 to 7 week downtrend may actually have bought us some time in the bear market that we could currently be in. So where maybe the bear market doesn't have to last all the way to 2026. Maybe it ends in half two of this year. You can already see that the RCMO value is we're currently in below a red signal line. It looks like we're about like 20-ish. I would really like to see RCMO come below the zero line and put in a lower low. I honestly think that's a very likely outcome to happen is for RCMO to put in a lower low relative to the August 2024 low, which was pretty low. That was at about negative 27, right? Like, and even in the COVID drop, we got lower than that. So I'd like to see that happen, right? Like that's kind of like what I think would be healthy to just. I think we're gonna have to let this play out, and we're in some kind of like a technical bear market as this plays out. If we go below the zero line, it looks like we got a shoulder, a head, and then a shoulder. No guarantee that happens. We could go right back up again. It's just the time that it takes usually to get from a peak this high to another peak is several years. Like if you study the history, you can see that with the exception of 2013, 2013 saw a little head and shoulders of its own, right? Like 2012 shoulder, March 2013 head, and November 2013 shoulder. And that 2013 shoulder was at a level of like 90, but this is during Bitcoin's early days where it was a lot more volatile. But from this shoulder of like November of 2013, not as clean of a head and shoulders as we're having now, it took like 4 years to put in another RCMO top. And then from this RCMO top, December 2017, it took almost 3 years to put in another RCMO top. And then from January 2021, February 2024, it took 3 years. So if the pattern holds, which again, like it may not, it could take another 3 years for this to top. It could this metric might not top until early 2027. If the time that it takes to top shortens, maybe it doesn't top until sometime in 2026. But I don't know. I mean, it is possible we come back up here again and put in a blow off top at the end of the year, like around 200K. That could happen. It's possible. I'm not writing that off as a possibility. It could certainly happen. That would be a little unusual, but it certainly would rhyme with what happened in 2013. Okay. So that's just something that I want to pay a little bit of attention to. I think with a head and shoulders, the most likely outcome is that we go down. But and a lot of that just has to do with what's going on macroeconomically, right? Okay, so are we heading into a recession? That's unknown. Does seem like a bear market is a likely thing to happen, but as far as a recession goes, we just simply do not know. Now, I want to point out kind of what happened last time the federal funds rate was fairly elevated. We actually had a quantitative tightening cycle that occurred in 2016, and we actually had a bull run during that time, right? But then around the time that tightening started to really, get a little bit too high, like around 1.4%, and we started running up to like 2% interest rates, that coincided with the bear market. Okay, then we had the Fed come in and start to cut rates. And you can see that when rate cuts were paused, the market rallied, right? But then as soon as we got the first cut, the market started to drop. And then it really dropped hard on the final cut. Okay. The final cut is when we got this like really dramatic drop. We had nearly zero interest rates during the 2020-2021 bull run. But that unfortunately created quite a bit of inflation. I want to overlay inflation here in just a second so we can kind of like, take some notes. We reached the ceiling of our federal funds rate in July of 2023. You can see that the market enjoyed a nice rally through part of that, and then it just kind of went sideways. Then we got the first cut. Market actually rallied into that cut, and we've come down quite a bit, right? Like from 5.34, we're down to like 4.34, nearly 1 point lower, 100 points lower. So we're anticipating some more cuts this year, right? So, we only have one data point to go off of. But if these cuts start to get dramatic, that could indicate something's wrong with the economy, just like what happened here. And that could send us into a recession, could send Bitcoin price going lower. That's something to watch out for. Okay, now the yellow curve is inflation. Inflation is currently at 2.4% according to BLS data. According to Trueflation data, inflation is lower. It's like at 1 point something percent. The Fed doesn't care what Trueflation says. They only care about the BLS. So that's all that's going to matter to us. Inflation really peaked out in June of 2022, and we know that was a pretty significant bottom in crypto. The bottom that happened in December, percentage-wise, wasn't nearly as much of a drawdown as from December of 2021 to June of 2022. Markets don't like inflation. And the inflation rate was ridiculously high. At this time it was like at 9%. We have never experienced inflation like that in crypto's history. So what's going to happen now with tariffs? Well, that's the thing. Like, tariffs do cause inflation. The question is how much inflation, how long will it take to really be felt in the economy? All those are kind of unknowns. What I can tell you is that the trend for inflation looks bearish. It does look bearish, but this could reverse at any time. And if this does reverse, that is not a good thing for Bitcoin. We don't want to see inflation go up in a material way. That will be bad for not only Bitcoin, but for risk assets as well. We want to see inflation continue to trend down towards that 2% target range. And that's where the Fed will feel comfortable cutting rates. Let's take a look and see what the market participants are saying in terms of rate cuts. I think the recent pain in the stock market and Trump's stance on tariffs has swayed the likelihood of a rate cut substantially. I remember when the likelihood of a rate cut at May 7th FOMC was like 12%. It's moved quite a bit now to 40%. Of course, it's still majority saying at 60% that we get a rate freeze. Okay, that's what the majority is still saying. But if we put on the probabilities, this has changed a lot from what it used to be. So we have market participants putting in a 40% chance of a cut in May. That is a non-trivial chance. We should consider the fact that that could happen. This number could go up. June, it seems almost certain that if we don't get a cut in May, we're going to get one in June. 50% locked in. In fact, this number is starting to grow. Right? So 375 to 400, we have a 19.1% chance of that happening. And then you get into July, it's almost certain we're going to see another rate cut, potentially 100 or 50 basis point cut, right? And then there seems to be an idea that, and then it just gets really all over the place, folks. But the market seems to think the terminal rate, at around that time could be in the 325 to 350 range. And in 2026, it seems like the Fed holds steady at that rate. So if that's the floor, then you would probably anticipate Bitcoin to start to encounter some downside volatility during the most dramatic of those cuts. And it's hard to say when that might happen, But this is why I think some kind of bear market that could last at least through half one and certainly well into half two is a potential outcome, right? If we can achieve stability anytime, that's going to be good and could correspond to Bitcoin putting in a market cycle bottom on a hard landing potentially. Could the Fed achieve a soft landing? I mean, it's possible, but it's only happened one time before in recorded history. So let's not bank on that happening. But man, market participants really have no idea what's going on right now. That's what I take from this data. That uncertainty to me is feeding and fueling more bearishness, not bullishness. Want to talk about a slow, never ending bull market? Look no further than Bitcoin dominance. We're going to talk more about the effects of this really strong Bitcoin dominance in our next video, which is going to focus on Ethereum. But like, look at that tight 2-week Gaussian. I mean, that is bullish. I know dominance did have some trouble at the end of 2024 that coincided with a very brief altcoin season, but we haven't seen kind of altcoin seasons that we typically see in bull markets. And so this is one of the things that has me thinking that our bull market for crypto is not really over in the traditional sense, right? Like our market cycle has been anything but traditional. And I'm going to come back at the end of this, very soon, end of this video. And if you stuck around with me this long, you'll get to really hear my full thesis on what I think is going on. I think at some point, Bitcoin dominance is going to weaken. And I think it's going to weaken this year. I think it could even weaken as soon as May, if we get a rate cut in May. Whenever the market sniffs out quantitative easing, I think we're going to see Bitcoin dominance start to roll over a little bit. And it's really crazy right now. I wanted to show you something else, just the altcoin season index, and just how deep into Bitcoin season we currently are. It's like pretty insane if you haven't seen it in a while. I show this once in a while. We have a score of 14 currently. Look at this. I mean, just straight on Bitcoin season. When have we achieved scores this low? I mean, honestly, it's been a while. Like, it happened briefly in July and October of 2023. 2023 went even lower, right? It's been a while though, hasn't it, since we've achieved scores this low? If we start to get really recessionary, I anticipate we could start to trend even lower and maintain these lows for quite some time. I was kind of shocked to see these the sideways period highs taken out, but it got taken out. So here we are, deep into Bitcoin season. I mean, just nothing is doing well against Bitcoin. Ohm is, but look at this. Everything's just down. It's not good, right? Not a good time in the market. So when I look at Bitcoin dominance, I really it's almost at the 786 fib yet again, and it just really gets me thinking, like, how high can this thing go? Like, I thought maybe the 786 would be the stop out for it, but things just look so bullish right now for dominance. It could get above the 786. We could enter into this region potentially and get close to the 886 fib for dominance. And that's a devastating result, but that's what happens when your market is risk off. Bitcoin's going to be the only thing running in a risk off market. And here's gold. Look at gold. I like to put gold on the monthly time frame, but like, just to show you how risk off the market is right now. This is insane, isn't it? When was the last time gold had a bull run like this? Well, it coincided kind of with Bitcoin's initial capitalization period. And then gold went into just this like prolonged like head cup and handle, right? And Bitcoin had some of its best performances during the sideways period by gold. But man, gold is just like skyrocketing. And if we look at the RCMO on gold on the monthly, we can kind of get an idea of how much room gold might have to run. Certainly gold running like this is not a good thing for Bitcoin. It's not a good thing for risk assets. But here's the thing. Well, I guess the good news is gold has reached on the monthly, as of Q4 of last year, some pretty high levels on the RCMO, like 97. When was the last time gold hit 97? Let's go ahead and put a horizontal line there and find out. Okay. Well, I put it in 95. Folks, it has been decades. Decades. Probably the closest we've gotten was February of 1980. Before that, April of 1968. Before that, November of 1964. So it has been a long while. What does that tell you? Especially as gold's putting in a lower high here. It tells you that the majority of gold's bull run is probably kind of coming to somewhat of an end, at least for now. All right, I'm not saying gold's about to enter into like a long bear market or anything, but I think this parabolic phase by gold is likely to end relatively soon. That could be a good thing for Bitcoin. But a lot depends on what happens with the economy. People are flocking to gold because they're scared, right? They're scared. Silver, which is like the Ethereum, hasn't done a whole lot. It's still going sideways. Just telling you, market is very risk off. I expect that gold will rotate into silver. So while this is not a gold and silver video, certainly if you have a lot of gold and you're looking to offload it to something, probably silver would make the most sense right now. But I'm not going to talk too much about that. I just want to just trying to show you like why I feel the market is just very risk off, but that this may not last. This risk off period may not last as long as you think. Okay. I want to come back to Bitcoin. Let's go on the 2 week. Let's turn this off. And sorry. So here's kind of what I think has happened with the market cycle. I hinted at this a few times earlier in this video, but I really do believe that something similar is going on to what happened in 2019 and 2020, as well as 2013. But we already talked about the 2013 similarity. That's more to do with momentum. So remember the 2018 bear market, just your normal like 2 week bear market, Sorry, I'm tired. Your normal like year-long bear market. And then we had this echo bubble. And during this echo bubble, what was Bitcoin dominance doing? Bitcoin dominance was elevated. This was really kind of like a Bitcoin only bull run. It was a bull run. This is a risk off bull run. It's essentially what we had. And then we had another bear market. And that bear market lasted for like 9 months. And it ended when the Fed started printing. It ended on a recession. It ended at the bottom of the green Gaussian channel. See, I'm not saying that our Gaussian channel has to turn red. It doesn't have to. Well, what just happened? We had a year-long bear market followed by potentially an echo bubble, right? Like this could be an echo bubble of the 2021 bull market. It's just things have slowed down so much. This entire bull market was pretty much risk off. Like, yes, we had altcoins flying on Solana. We had altcoins flying on Base. But there was never a time where you had that everyone is a genius period. And maybe those times are over. For all I know, they could be over. But I don't think so. Like, I want to show you something. Like, let's look at total crypto market cap. Okay. Did it really go up? Was there a lot of new liquidity that was added to crypto? No. What does this mean? This means that most of the money that found its way into crypto, like, matches like 2021 levels. That hasn't happened before, right? There's a clear shift in liquidity from 2017 to 2021. A clear shift in liquidity before that. This is crypto total market cap. This is not a sign of a healthy bull market. This is a sign of a risk-off bull market. We need to see this move up. But when is that going to move up? Well, if you look at USM2, see, you have to follow the money. M2 is just barely, it's been sideways, just like the crypto market, total market cap. I think we need to see this start to move up before we see our crypto market move up. That's what needs to happen. We need to see quantitative easing. We have yet to see that. And why am I telling you this? See, like right now, we're pretty much at the peak levels that we were at in March of 2022. So there is some quantitative easing happening, but we still have yet to take out the 2022 highs. So why am I telling you this? Well, because I believe that what we just experienced is a risk-off bull market. This entire move by Bitcoin, I think, was a risk-off bull market. And it was a long one. The last one was a very dramatic one, right? That went from like the lows of December 18 to the highs of June 19, like a 6-month bull market. This bull market was a lot longer, and it lasted all the way from December 2022, what we say January 2023, to arguably, December, January. Okay. And trend's been down ever since. Now, we haven't proven that we're in a technical bear market yet. Like, we need a little bit more confirmation for that. And certainly things could turn around and we could go right back up. That is a possibility. It's a non-trivial possibility, but the market sure doesn't seem like it's heading that way. So if we rolled over here and had a bit of a bear market, it would rhyme very strongly with what happened at the end of 2019 and early 2020 with this COVID drop that sort of like finalized it and turned on the money printers, quantitative easing. I think we need to see a return to quantitative easing. Now, here's the thing. The Fed is likely to cut rates this year. That is a form of quantitative easing. But we have the tariffs, which are potentially going to cause inflation. Will the inflationary effects be felt right away? I think many of them will, because these are like immediate tariffs. But it's just like wildly unpredictable. We just don't really know how that's going to go. Now, if the tariffs and like let's say that we get a bear market, no recession, right? Then I think like a low around 63, 64K can make sense. I talked about that as a low price. If we get a recession, I think a low between 32 and 40,000 is on the table. Now, I'm not going to enjoy a recession. I'm not going to enjoy a bear market should those occur, or should we be in one of those right now. But I think that would act as a transitionary period for Bitcoin and crypto in general. And I'm going to get into this in my next video and kind of give you some more details, from risk off to risk on. And that's exactly what happened, right? Like the transition here was you had a bear market, you had a risk off bull market, or echo bubble. And then you had a transitionary period that was risk off. And this is as rates were being cut, right? This is quantitative easing happening. The real money printing didn't start until COVID. And we had stimulus checks and all kinds of stuff. I mean, money was being printed like crazy at a rate that's higher than any time in history. And we got a very rapid bull market out of that. Got cut short by inflation. Okay. So I don't think we're going to see something like this. I don't think we're going to see a V-shaped recovery. I think we may see a normal looking bear market that could take us down maybe in the 60s, maybe lower in the 30 to 40 range, right? Like we just don't know. It's unpredictable. Like what if we get like a head and shoulders pattern on price? Right? Like maybe we come down. I think we're going to get a bounce. Like even if we're in a bear market, I still think we're going to get a bounce. I don't think we're going to go straight down. But we need to be able to put in a higher high, right? Like to invalidate any kind of bear. I mean, looking at the parabolic SAR, I think I looked at it on the weekly. Correct me if I'm wrong. But you can see with the parabolic SAR, I mean, it's just one bear dot after another that we're printing. Okay. We printed quite a few last year too. So something, this is showing something is wrong, right? Something is wrong. And what's wrong is I think the economy is being damaged. And you look around you see businesses closing, people are getting laid off. Like it's starting to happen, folks. Like recession is a possibility. So Bitcoin's put in like a slightly higher high. Right now in 2019, it didn't do that. It put in a slightly lower high. But the fact that it just took so long to do this, right? Like in 2019, it was literally like you had your year-long bear market, boom, bull market. So it just wasn't the juice to get it to above 20K. Here, I mean, we're talking like multiple years, and we finally completed this cup and handle in a very disappointing way. Certainly not like gold, not like gold at all. By putting in a slightly higher high relative to the 2021 high of 69K. Like 109K, it's not even a 2x from 69K. It's really not that impressive. I haven't seen the impressive moves yet. I think that the money printers are not going to turn on as rapidly as they have in the past. So I anticipate whatever bull move comes next, my feeling is it's going to be slower. I think it'll still be impressive. It could still end with a blow off top in like late 2026, maybe 2027, who knows? Like if we follow the RCMO, you would anticipate another trip to the 100 level if we don't get one now to take until 2027. So it could be that, we end up with a price somewhere between 200 and 300K around then. Like who knows, right? Like I can't tell you, but that's a possibility, right? And this could just be like one long like sideways period. It come down again and then go back up. I think if we do come down, folks, we're going to put in a macro higher low. So I think that regardless of what happens this year, I do not think, I would bet money that these lows, the 2022 lows, don't get taken out. I would also bet that this low here, which was a higher low, macro higher low from 2023, doesn't get taken out. The low that I'm watching for right now that I'm uncertain about and I think could get taken out are these lows here. Okay, the 49K, I'm not so sure will hold. That's a key level to be watching. If we breach that and start to go down, yeah, then we've been in a bear market, and the bear market will likely continue. I don't think that this low from 2023 will get taken out though. So I think the structure of a really long bull market will be intact. That's what is my base case. And this rhymes very strongly with 2019 to 2020 in sort of the essence of what's going on. You have a flush out that kind of coincides with quantitative tightening, transitioning to quantitative easing, and then you get your bull. I think the bull this time, which is started, this is still a bull market, it's just risk off. I think the risk on bull market could start later this year. Can't tell you exactly when, but I think it could start later this year. Maybe in the longest it takes is till the middle of 2026. That's kind of my worst case scenario. I don't think that's likely to happen. I think sometime this year, towards the second half of the year, is what I'm going to just say for now, is where we could see a transition back to risk on. And I will talk more about that in my next video. I really wanted to do a comprehensive Bitcoin update. It's been hard to do videos in this kind of environment because it's just I don't have a lot of great news to celebrate with you. Everything's going down. So it's how many different ways can I say that to you? So then I hope you enjoyed this video. This is a really comprehensive overview of what's going on with Bitcoin. I try to throw in some macroeconomics to kind of give you the big picture that I really feel like we're not entering into, in my opinion, something like a 2022 ROI based bear market. Which also corresponded with inflation going sky high, or a 2018 style bear market. I don't think that's the case. I think it will rhyme a little bit with the 2019 to 2020 bear market. That's more of what I'm kind of thinking. And they could be quite volatile at times. I think it does likely end with a dramatic drop, and it could be a series of dramatic drops. It could be a double bottom for all we know. As to what that bottom is, it depends on whether we're in a recession or not. That's all I can really say. And nobody knows if we are in one. And by the time we do know, it's probably almost over anyways. So how do you prepare yourself during this time? I mean, I feel like one of the ways you do is just kind of look at, the market is being risk off and flock to stable coins. That's one of the things you could do. Just stack cash during this time until you see a reason not to. Maybe we'll take a look briefly before I close out this video for those of you who are still watching, because you're the true champs, right? You're still watching. You're still here. I want to take a look at tether dominance. I haven't looked at this in a while. If we look at tether dominance, we can see we have that double bottom. I've talked about that on the channel. Kind of as it was forming, we're at the 618 fib level. Let's see what the Gaussian is looking like. Okay, we still got that bear market Gaussian channel. So that is something to keep in mind. If we can't get above this bear market Gaussian channel for stable coins, we could see a bounce, right? We could see a bounce. Now, this is a tricky thing, right? This is quite a bearish formation in terms of the Gaussian, in terms of all this price actions, some prevailing bearish momentum. There's a little bit of a wild card here, right? So this is why I'm saying I think half two of the year could end up being bullish for crypto. Things may not take as long to play out to the downside as we think they're going to. Now, if we breach this channel and we go higher and we see the channel potentially inflect, that's not a good sign. We don't want to see that. We don't want to see people flock heartily to cash. And having a double bottom structure here is a pretty bullish. We got a bullish chart structure with a bearish prevailing momentum. So it's really anybody's guess as to what happens here. I truly don't know. We are facing resistance at the 618. I mean, that's a good thing for crypto. How long that resistance lasts. Do we get a second rejection at the Gaussian? That I don't know. I mean, you would think we would based on this chart. It's pretty rare to see a 2-week Gaussian that's red and concave down like this get breached. It's a rare thing. And if it does get breached, it's usually a fake out. Okay. And in all my time studying Gaussian channels, I haven't seen that happen too often. So this is a real wild card, and we can even throw on the RCMO. Now, granted, the RCMO does look bullish for stablecoin dominance, which stablecoin dominance has been in a downtrend for a while, right? So, but inverse head and shoulders on this. So, I mean, the unthinkable might happen. We might breach that 2 week Gaussian to the upside. So, this is something to watch, and kind of telling you that having money in stable coins or stacking cash right now is probably not the worst idea. It's not financial advice for you, but that's certainly like I haven't been putting any money into the crypto market. Initially, I was buying some Ethereum, but I stopped doing that very quickly because I saw that market doesn't look good. Okay, so I would have a stable coin position or cash on the side. It's risk off right now, so maybe wait for confirmation, right? Um, with Bitcoin being in such definitive Bitcoin season, there is a chance that we get a little altcoin bounce, right? That could happen too, but we'll talk more about that later. That's a different video. I think we've been going for 51 minutes, really long video. But it's been a while since I've done an update. So I hope you enjoyed the content. Please be sure to like the video, share it with others in your Telegram channels that you're a part of, in your Discords. Really helps with my reach. And comment down below with your thoughts about what you think is likely to happen with Bitcoin in the next few weeks and months. Also, be sure to subscribe to my channel, hit the notification bell if you haven't already, and join my Telegram channel. You can't really see my finger, but it's by the microphone. There's a link in the video description where you can join my Telegram channel to engage in educated and respectful discussion about the crypto markets. We have some really smart people there, about 330 members. We'd love to have you join us. It's completely free, as is everything on this channel right now. So we'll see you again next time. Have a great rest of your weekend.